Online trading in South Africa has stagnated over the last few years as retail volumes have come under pressure, but many brokers have begun to innovate around the sector, and we take a look at the trends that are emerging locally. Joining us for this discussion this afternoon is Shaun Murison. He's market analyst at IG South Africa, and Richard North, joint country director at Saxo Capital Markets as well. Gentlemen, thanks so much for joining us. Before we get into the specifics of online trading in South Africa, what was the appeal as you saw it, Mark?
Yeah, so I mean, I've always been fascinated with online trading as a retail environment because I think that, South Africa's quite, I find South Africa's been quite slow to innovate around the sector for the last couple of years, especially when you look at some international offerings that have subsequently come in the last couple of years. A lot of the products were very, very similar, and it was quite an expensive way to transact, and there was very little innovation in terms of the way that the brokers interacted with their audience. They didn't use social media. They didn't get to make the market analysts available to talk, discuss opportunities in the market. And I genuinely think that the last couple of years, obviously being tough for retail investors to try and attract new customers to stock brokerages, they've really done well. Probably the last 18 months, they've really done well to find new ways to engage with an audience. And for me, I enjoy what's happening around the social media side of things, Twitter and Facebook. I enjoy the cost. A lot of the costs have now become very similar in terms of, guys are not competing on cost. Now they're trying to add value to the clients, and I think that clients are the winners in that.
Let's take a look at some of the trends that are persisting, because one would assume you've got to do it at a certain cost, at a certain price tag. That's part of the appeal, because you're appealing to basically a DIY investor, if we can call him that. It makes sense to use an online stockbroker in that regard, because basically you're buying and you're selling yourself. Are you necessarily getting it at a lower cost, Shaun?
Well, we've seen great growth in the CFD market. Over the last financial year, we've seen about a 60% growth in active clients. The real trend is, like Mark quite correctly said, is towards the mobile, so we've now got mobile usage of almost 20%. That's 1 in 5 transactions of our clients are placing trades using their phone or mobile device.
What's driving the mobile phone usage? I mean, I always find that a lot of the systems are still quite clunky in terms of what you can do. It's only really been last year. I mean, primarily CFD type trading, or is it also equities?
Well, we specialize in CFD, so we're noticing definitely on the CFD side. In fact, IG, of 1,000 employees, we've got about 400 to 500 that are specifically on IT, that are just working on that constant innovation. This trend has gotten, last year we were probably looking at about 13 to 14% of users using mobile. Now we're close on 20.
Yeah. Looking at the picture, Richard, when it comes to the kind of investor that delves in here, just how aware have you got to be about the cost? Because I came across that it can make investing expensive for small amounts. So you've got to be a certain kind of investor that takes advantage of this kind of opportunity.
I think, you've got to look at it from a perception of also transparency. Before you phone, execute the trade, get a broker's note the next day, we're talking about going onto a system, putting in your order and seeing your costs right then and there, live in that market. And you've got to take costs aside. It's transparent. It's significantly cheaper than it's ever been before. Okay? It's a value add around that. The whole online community on online trading is now bigger than, it's bigger than all of us. It's a phenomenon that is going to continue into the South African market space. Look at it as an age of education. People are getting more educated, more advanced in their trading, and that is just a fantastic aspect of the market. Never before have South Africans had the opportunities to be more educated, more knowledgeable, and more transparent in their dealing.
But that's putting a lot of pressure on the stockbroker or the online service providers themselves, because in terms of the kind of services they're actually offering at the end of the day, you're going to have to see innovation come through. For example, live prices being reflected, research, interactive graphs, as this audience wants to become more educated.
It's all available to them already. We have South Africa's come leaps and bounds with the impact of foreigners coming and investing into South Africa in terms of technology. It's there, it's available to Joe Public right now, and they need to get up and say, I want to take control of my financial future. I want to get involved in this.
I think also now, in the past you pick up the phone and you phone your broker and the deal gets settled 7 days later, but we have from a platform, we have global access now. We're not just limited to trading to one market. We can trade various markets and trading those various markets across different asset classes, which is, it's a luxury that we haven't had before.
And of course, that throwing in the spotlight exchange controls, and to what extent an individual can actually leverage off this new opportunity to diversify his or her portfolio.
Yeah, that would obviously, if you are trading from offshore, you would need to have funds in an offshore account as per Reserve Bank regulation. Yeah.
I think one of the areas that I find interesting is the social media element. Obviously, working in the media environment, you find that it's a tool that you can use, in our case, to educate readers, your case to educate retail investors. I mean, maybe what are the trends, maybe looking at some of the trends, and particularly let's use the Saxo example of the tradingfloor.com platform. I mean, that to me is the premium example of social media, where you've got market analysts, portfolio managers constantly interacting on a day-by-day environment with investors.
You think about what it used to cost you to take the trading costs out of it, what it used to cost you to get access to that type of information. We've now got information coming out on Twitter and on these communities, online communities, before it's coming out in some of the major news services. To talk about Elon Musk, he put out an announcement on Tesla, and the SEC ruled that it wasn't insider trading. So come on. It's phenomenal. It's incredible. The only advice I can give to clients is don't get lost in the heat of it all. There's a lot of information out there. Go through, not everything you read is, there's a lot of good and there's a lot of bad. So the important thing is you've got access to that information. Read it, get knowledgeable, get excited about it, get involved in your portfolio. And this information's there, it's out there, and there's genuinely very intelligent analysts out there who are posting fantastic blogs.
We're talking about increased accessibility. We're talking about, the kind of shifts we're seeing being made in order to entice investors this way to online trading. Just what kind of uptake and interest are we seeing from the investment community itself?
Like I said earlier, we've had 60% growth in the last financial year in active clients, because harnessing the power, I mean, the social media it's new to all of us. I mean, it hasn't been around for that long. And I think what all us providers are starting to do is starting to integrate that technology into the trading floor, into something like IG Insight, which is something that we offer. And Twitter's great. I mean, it's not only used as a sales tool, it's used as a news, how to filter a news feed. I don't have to go, instead of browsing 100 different websites to go gather information, I can now streamline my newsfeed directly to myself. Then I
can explain the stock market to you in layman's terms. Bride and groom walk into a wedding, everyone claps. And what you'll find in human nature is everyone will be clapping randomly, and it's an efficient market. People are clapping at all different ways. Human nature decides that eventually everyone will start clapping together and beating the same drum. And that is what creates bull markets and bear markets. And now we've got access to this online communities, media, where this information is coming in, and that's going to enable it's going to enable markets to push and people to trade more actively, and also for them to come down.
I think one of the things that I find quite interesting, looking at both of particularly the international players, there's a lot of information there. The analysts have got quite big followings. I mean, Rubini, and let's use a neutral example there. Rubini has managed to generate a huge following on Twitter and that kind of thing. But do you think it leads to a lot of short-termism in terms of decision making? Well, Rubini says buy gold today, so everyone goes and dials up their broker and says I must buy gold. I mean, what impact? So there's a big picture question: is what impact do all these sort of experts on Twitter now have on it, and more on a day-to-day basis? I mean, if you tweet that you think that Bonani is a great investment, or some pick a stock, do you have immediate uptake? Do you guys kind of pick up the phone and start dialing you?
As an online business, most of our transactions come directly from online trading. So you do have the phone calls and guys ask questions. I think if you're following us on Twitter, I think the information that gets given to you will quickly get weeded out. I think information that's not useful, you won't carry on following somebody that's not assisting you in trading. Perhaps there are some types of self-fulfilling prophecies that come through. I think that's what maybe you're alluding to on that. But it's hard to have a clear gauge. There's just so much activity going through on Twitter feeds at the moment.
I'd like to jump in there on that as well, if you don't mind. Is that if you're going to buy a car, you go and speak to a mate who knows about cars. That's what it comes down to. So you follow different people. I'm certainly not going to go and ask my wife about which car I should get serviced. Or
You better hope she's not watching right now.
But the important thing is I'll go to someone I know who's a reliable source. And this is the fantastic ability of social media. You are hearing from people who you respect. And if that information isn't good, you're going to drop them off your watch list and say, I don't actually want to hear what that person says. You know, we have people who post information and they have success rates, and we gauge their success rates. We're bringing out a new product called copy trading. You can actually follow people. People are publishing their portfolios online and saying, this is what I'm doing. If they mess up, it's freely available and you stop following them. So you get that opportunity to come in and actually follow people who you think. And word of mouth, you know, it's an old adage, you'd go in and you'd ask someone who you respect, and that's what online communities give you.
Let's flip it around and say now you're a director of a business, and suddenly you've got, you know, there's rigorous compliance that your own employees need to go through, and suddenly it starts blurring a line between what constitutes financial advice versus execution.
100%. You've just hit the nail on the head. And the SEC just ruled that Elon Musk's tweet was not insider trading. You can go out there and you can say, scream from the rooftops, buy gold. If someone follows you, you have no risk in that aspect. And that's what trading floor is. The thing I love most about trading floor is no one is beholden to it. It is not an analyst who works for a bank and he knows if he says Imperial is a bad decision, they're going to lose business or something from the brokerage, you know, that type of connotation. You can say what you want. If you go, you know, there's been incidents in South Africa, people have tweeted and gone into a lot of trouble, okay? So you are beholden to what you say, only you, not anyone else. And from that regard, it is fantastic. I can stand up there and say, I think we're going into the biggest bear market. Market's going to fall 8,000 points in the next week. If it doesn't, people stop following me. If it does, I'm a genius. And that's, you are beholden to yourself in that regard.
Well,